Well, hello again, everybody. This is Jeff from www.stock-trading-picks.com with another market timing update for the end of the week. This is an update for the upcoming trading week, which starts on January 31st. We're only going to look at two charts this week. I explained in my blog that there are certain times when the indicators just don't add a lot of value, and this appears to be one of those times. The market is moving very quickly to the downside based on last Friday's action, and what you don't want to do is start looking at indicators because you'll miss the profitability of this move downwards. And yes, that is right, you can make a lot of profits as the market falls down, but you have to be pretty nimble, and we'll talk a little bit about that in another post when we talk about contra ETFs. But right now, let's take a look at the weekly market timing chart. You can see last week that I pointed out that it appears high probability that we get a move down to this support level at the mid 12,000 range, and then potentially a bounce back up. Last Friday's trading, if you were watching, created a huge down day. I think we were down 2.5%, excuse me, on the day, and you can see from the weekly chart that we've created a topping tail candlestick here for the week, which is extremely bearish. You can also see that some of the marketing indicators are also rolling over, although we're not going to pay a lot of attention. These are more confirming indicators. The MACD is starting to roll over, and the stochastics also. What's insightful here is that we did get a small bearish divergence as we came into this area here. We saw a lower price here and then another low, but we didn't get the low that we had anticipated on the MACD. On the daily chart, you can see that a lot more damage is done technically to this market than may appear on the weekly chart. Like I mentioned, Friday's down day, 250 points was the change on the broad market, almost 2%, which is a fairly significant drop down. I did draw in this support level here, which coincides with the lows in this area and the highs back in early trading in January. So it looks like we may end up with a down January after all. For all you people who follow the January indicator, that may not be a good sign. But nevertheless, prices did close below this lower trend line here. I certainly expect that this trend will continue down until we get some support. The first support level looks to be about the mid 12,000s, like I've mentioned several times. So as I showed you on the weekly chart, I fully expect this market to keep falling down, largely based on the overbought conditions, and quite frankly, this was sparked by the unrest in Egypt. Doesn't seem to be appear to be going away anytime soon. As a matter of fact, it appears to be getting worse. And also, you can see last Friday created expanding volume on a down day. Not a good sign. Time to start looking to take positions in contra ETFs. I'm going to write a blog post later on today that will recommend some contra ETFs that you may want to consider to make money on this downturn. Yes, you can make money on a falling market, but like I said, you have to be nimble. Stay tuned to the blog site, www.stock-trading-picks.com. We'll have the top stock picks later on Sunday in preparation for Monday's trading. So good trading to everyone. Thanks for joining me, and we'll talk to you again next time. Thank you. Bye-bye.